traders, this is Blake Morrow, and you are listening to the week ahead video for August 13th, 2017. And like I said, my name is Blake Morrow. I am with ForexAnalytix, and I'm glad you're listening to this video this week. Now, before we get into the video, as always, I got to tell you, if you haven't taken your trial for ForexAnalytix for $1, $1 for 10 days, make sure you do that. All you have to do is click this button right here where it says sign up today. And then once you do that, make sure you go download the mobile app so you can get all the push notifications, all the analysis when you're mobile. I'll tell you, when I'm mobile, I can't analyze the market. I can trade and I can exit positions, but I have a really difficult time knowing what's happening because the charts are hard to read. But if you have charts that are pushed to you when key levels are hit, key fib levels are hit, patterns develop, whether it's Elliott wave or harmonic analysis, and they come to you and you can enlarge the chart and look at it and see what our analysts are seeing, it could help you make a decision. Versus playing defense, you could play some offense when you're mobile as well. And I know a lot of us these days are mobile when we trade. So we're going to talk about this upcoming week. But before I do that, I gotta tell you, we cover a couple cryptocurrencies, and you can see Bitcoin and Ethereum, and we have the analysis, the basic technical analysis and candlestick analysis is wrapped up into one with these two particular instruments. But you can see that they are very bullish, and from harmonic to Elliott wave to basic technical, macro for Bitcoin isn't, but Ethereum is, and we've breached every resistance level just over the course of the last couple of days. And I want to show you what we had posted just over the last 24 hours, and by the time you're watching this video, it could be 48 hours, but we hit 161% extension in Bitcoin from the last consolidation period. And, relative strength is getting a little overbought, but Bitcoin continues to rally at the time of this filming. And you can see we're pushing higher through that resistance. Relative strength is still very divergent, which doesn't mean anything in this market other than you have to be careful. It doesn't mean you should short or anything like that, or you should necessarily sell. You just have to start being more cautious as we're rallying. But the reason why I want to bring this up is if you look at, and I'll just read you the analysis on Ethereum here, just from the basic technical analysis standpoint. Ethereum it continues to underperform the Bitcoin market, and that's really all I need to read, because you can see Ethereum is really underperforming here. Now, if you look at like the harmonic analysis of Ethereum, our one and only Nicola Duke is still looking for a push higher, or was to 300, and you can see now we are past 300, but because that analysis was from a couple of days ago. But regardless, we are at levels where you got to be careful, but Ethereum continues to push higher because it's being dragged up by Bitcoin. The scary thing about Ethereum is because they're they are complementing rates. You get cross analysis, if you will, between the two. That means as Bitcoin moves up, Ethereum tends to be drug higher. If Bitcoin comes under pressure from profit taking, which undoubtedly it will at some point, it could be at 5,000 for all I know, but once Bitcoin comes under pressure, wherever that may be, the thing that you have to be most concerned about if you hold Ethereum is that you might get a situation where Ethereum pulls back a little bit more aggressively than Bitcoin. So I just want you guys to be aware of that for those of you that trade cryptocurrencies. Now, let's talk about this upcoming week, and let's talk about the performance of the dollar. The dollar really has underperformed, and it looks horrible. I mean, if you look at the dollar index has not been able to scale above at 94 resistance, and the dollar is back under pressure. Weak CPI numbers this last week on Friday. Even though the relative strength is trying to diverge here, it still looks extremely heavy, and channel support comes in around 92. Relative strength is very oversold, and you can say the same thing about the euro dollar as far as being overbought, but that doesn't mean it's gonna stop. I've been looking for a break above 94 to start picking up dollars for a counter trend trade, and believe it or not, I got out all my positions, my dollar positions ahead of the CPI numbers. I've actually made money on the long side of the dollar this week personally, and it's been kind of challenging too. You pick up the dollar down here, and the dollar has been kind of bouncing, so I've been picking it up on dips. On Friday, just the bottom fell out of it again. So it's been a really tough trade to be long dollars, and so I'm just going to state while we trade below 94. I don't know if there's much reason to be long the dollar. I had expected the dollar to make that turn already, and it hasn't. One of the key tests this week, technically, was the euro dollar. Okay, the euro dollar hit the 117 level. Well, it dropped to like 116.80, and that was a key development because if you look at the weekly chart, that was also the highs from 2015, or the channel resistance, previous channel resistance. So we're holding well above it. Again, as long as the euro trades above 117 and the dollar index is below 94, I don't know if there's a lot of reason to be long the dollar yet. Once, I say once, but it's more of the question is if the dollar makes the turn, that's when I think you can start buying dips in the dollar. Right now, I think we have to sell rallies until proven otherwise. Now, there is some data coming out this week that might alter the dollar, but the inflation data this week, both Thursday and Friday, and producer prices and consumer prices came in weaker than expected. And we do have the FOMC meeting minutes on Wednesday. We have on Tuesday we have retail sales. Will those turn the dollar ahead of Jackson Hole, which is next week? Jackson Hole, I believe, is August 23rd, 24th, 25th. I have to double check that, but I know it's towards the end of next week. But I don't know if the dollar is going to really make too significant a turn ahead of that. So you have to just be really careful. One of the other big developments too, if you're talking about the dollar, is going to be the Aussie. The Aussie really held its breakout point as well. You can see that breakout point from May of or April of 2016. We tested it perfectly on Thursday and we bounced. Now, I do want to talk and take a moment to talk about the S&P. The S&P had a significant sell-off on Thursday. We broke some key levels, key trendline support, and we broke through this, the support zone that we've been holding for several weeks at 2450. I would assume that any rally now towards 2450 is going to find sellers, and a move to 2420 seems quite logical. So if you think about it, maybe a bounce Monday, Tuesday, and then perhaps a resumption of trend down to the trendline support, major trendline support, which comes in at 2420, 2425. That seems logical. Now, if that happens, I'm more at this point in time, I'm more focused on the yen pairs. And the reason why I say that is first of all, you've got the dollar yen. Let's go over to the dollar yen really quick. The dollar yen has broken trendline support here. We stopped at horizontal support at 108.80. I think we went as low as 108.90. I want to say, or 89 or something like that. We came really close to this horizontal support. We bounced, but overall, it looks vulnerable. The dollar yen looks vulnerable, especially if stocks sell off. The yen might even catch a bid. Despite the tensions in Korea, the yen is still in demand, as much as that doesn't seem like conventional wisdom that it would be. It is. And so you got to respect that. The euro yen, we cracked a major support from, now this low was created the week before the French elections. And if you go back and listen to the week ahead video, we talked about this Gartley pattern you can see here. And we played that perfectly. This Gartley pattern, played it perfectly right there. I think I bought it maybe about 40 pips off the lows. It was a good pickup, but you can see we cracked that trend line, and so that, you know, puts the dollar yen bulls at a disadvantage at this point. So, you know, maybe a bounce back up to 130. You might find some sellers up there. You know, and you could say a lot of that, the same thing about these yen pairs. If you look at the pound yen, and matter of fact, if you read FX Street articles, you'll see I wrote something on Thursday night, Friday morning, on the pound yen. So you can read that full analysis there, but the pound yen really has, you know, it looks like it could bounce back. It cracked a major trend line as well. Now this is a post Brexit trend line break. So that was really significant, and you can see the weekly chart here. We cracked it, and that does not look good for pound yen longs. So selling rallies there seems quite logical. You look at the Aussie yen. The Aussie yen, you know, we stopped at this is a 50% retracement horizontal support. We got a hammer candle. Yeah, it looks like we might bounce back 100 pips or so, maybe less, maybe more, but it's probably going to find sellers on bounces now. This is a pretty key development. And then you take a look at the New Zealand yen. I mean, we got a huge, you know, triple top, quadruple top, five tuplet. How do you say that word? Anyway, we stopped at the 618, but you know, can we bounce back into previous support, current resistance, and find some sellers? I think so. That's something that I'm looking at this next week. Also, the Canadian yen. The Canadian yen, similar type of situation. I mean, we've seen a massive sell-off after this false breakout, and so now, let me go over to the weekly chart here. Oh, I didn't post the weekly chart. I'll have to repost that this weekend. The weekly chart in the Canadian yen. Let's go take a real quick look at it, and I can do it this way as well. You know, we had a false breakout over here, and you know, a lot of people are looking at this big inverted head and shoulder pattern. They got caught wrong-footed or on the wrong side of the road over there, and now we've come under a lot of pressure. So I think selling rallies here makes a lot of sense too. So if you think about the S&P bouncing early next week, and the Nasdaq and stocks, especially if nothing big happens over the weekend. When I say nothing big, no major geopolitical, you know, shenanigans happen over the rest of the weekend. We could rally early in the next week, see a little bit of a recovery, and then these yen pairs might be susceptible to more selling after we get past Monday, Tuesday, and that's what I'm thinking about right now, and that's the way I'm looking at the market at this moment in time. Again, guys and gals, if you haven't taken your trial of ForexAnalytix, all this analysis is pushed to you guys every day throughout the course of the day. You get updates from harmonic analysis to Elliott wave analysis, and try it out. It's $1 for 10 days. And also, please, if you're watching this on YouTube, which I'm assuming you are, click the subscribe button so you can get this video every week. And then also that little thumbs up button, you know, the like button. Click on that, please. I appreciate it. It helps us power forward and continue to deliver awesome analysis every week, or at least I hope you think it's awesome analysis. So you guys and gals have a great rest of your weekend, and we will see you on Monday on the FACE webinar with Dale Pinkert. Have a great day.